Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajashekar Kongari, Equity Research Analyst, part of MarketSmith India team. The disclaimer for this podcast is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. Uh, Here is the Nifty's daily chart taken from our website. It's a very happy moment for Indian investors who have been investing in the Indian market, and it is a moment to celebrate as well because Nifty is almost touching 20,000 level, which is very huge level. When you see during COVID, Nifty was trading around 7,500, and most of the participants were very low in their behavior or in their opinion about the market. But the way markets have reacted after post-COVID and the rally after which Nifty had or all the other market indices in the Indian market had is a phenomenal growth that shows the growth which India has and which will be there for the next 2 to 3 decades, which is expected by most of the global analysts as well. So it's a very monumental uh, stage where we are in currently. Nifty touching 20,000 level is a very positive and a very constructive level, and it will send strong signals over the global markets as well. Coming to Nifty's price action Fed, you can see in the last 6 to 7 trading sessions, Nifty has been trading in the higher territory and closing in the positive territory. The volumes wise as well, you can see almost on every day, Nifty volumes were almost average volumes, which is also a positive sign. Coming to the only perspective, we are in confirmed uptrend. Recently, we have changed. Last month, we have changed the market status to confirmed uptrend, and we are still bullish on the markets. There is no major sign of selling happening in the market. There is one trading session where Nifty had a decline of more than 0.2% and volume above average and higher volume. So that was considered as a distribution day. So distribution day count at one is not a major sign of cautiousness. So we are 100% bullish on the market. We are looking for fresh breakouts which are happening in the market. On the downside, this green line, which is a 21 DMA, which is expected to give support for the market. This is because recently in the month of May and June as well, June, July here as well, Nifty found good support at its 21 DMA. And going forward, this level is going to be a crucial level for the index. We are not expecting a major pullback on the markets, but there might be some here and there profit booking sessions which might be expected. And market trend and Nifty IT is not doing good. If you look at the ratings and if you look at the Nifty IT chart and other constituent charts as well, you'll get an idea. But once the Nifty IT joins the rally, then definitely we'll see further rally happening in the overall market. On this note, we'll move on to the next step, that is stocks which are in news. Starting with Infosys, that is a part of Nifty IT index. The revenue has grown 1.3% sequentially to 37,000 crores. Profit was down 3% sequentially to almost 6,000 crores. But the major part of the results was the revenue growth for FY24 was slashed by the company to 1 to 3.5% range from the earlier range of 4 to 7%. So this is going to be a major drawback on the stocks front and as well as the other competitors as well, because Infosys is expecting a lesser revenue growth for the financial year. So overall, IT space will take a hit because of this. On the EBIT margin front, they have not changed anything. They have maintained the margin guidance to be around 22%, which is a positive sign. Hindustan Unilever, major FMCG company in India, has come up with their results as well. For the quarter of June, revenue increased 6.1% year-on-year basis to 15,000 crores. Profit was up in a higher single digit, that is 8% year-on-year to 2,400 crores of rupees. On the EBIT margin front, it expanded 50 BPS to 23.2. overall good numbers from the FMCG company. Let's see how the markets react towards the results. Persisted, another IT company in India, has also come up with their results. The revenue growth was 3% sequentially to 2,300 crores, whereas the profit declined almost 9% sequentially to 228 crores of rupees. L&D board will meet on July 25th to consider share buyback, and also they'll announce the final dividend for the overall financial year 2024. So this is on the stocks front. We have other companies which have also reported their numbers, but these are the major companies which came up with their results in the yesterday's session after market hours. Coming to institutional activity, FIS, foreign institutional investors, have heavily bought in the yesterday's market. They have bought on net basis. They have bought more than 3,300 crores of rupees of Indian equities. Domestic institutional investors, on the other side, they sold marginally lesser amount of equities. They have sold only 193 crores of Indian equities. Coming to today's trading session, we are seeing big stocks such as Reliance Industries, DLF, JSW Steel, Ultratech Cement, Ashok Leyland coming with their numbers. Apart from these, there are lots of other companies also coming with their results. So as the earnings season has started recently, so there will be a lot of stocks coming up with their results, and the movement will be volatile in those stocks. So please be watchful of your positions if you have any of these stocks in your portfolio. Coming to the global market, if you look at US market closing overnight, Dow Jones closed in the positive territory, almost 0.5% gain. Whereas if you see other two major indices, S&P closing 0.7% lower, Nasdaq Composite has closed more than 2% lower. A major drawback has seen in the information IT space, especially. Asian markets are trading mixed. You can see Nikkei and Kospi are trading in the negative territory, whereas Shanghai is trading 0.3% higher as we speak. If you are looking for cues from the GIFT Nifty index, it is trading at 90,800 levels, almost 70-80 points lower than the yesterday's closing. So we are expecting a slightly muted opening on the Fed with a negative bias. But we are not going to see a major sell-off happening in the markets. That is what we are expecting, but anything can happen during the markets. If there is any major news affecting the markets, then we might see selling happening. But apart from that, we are expecting a muted session in the today's trading session. For the chart of the day, we picked Triveni Turbine. It has been in our watch list, and it was our ex-portfolio stock as well. We have added somewhere this breakout, that is previous breakout, and we have enjoyed and we have booked the profit almost 18-19% in the stock. And after addition, it has formed another base pattern, but it is not able to break out from the base pattern. That is the reason we have exited. And recently, if you see in the last 1 month of trading session, the stock has moved sideways, and there was no major volume as well. Volumes dried up, which is a positive sign. It came down on lower volumes, sign of positiveness. And 50 DMA, which is a red line here, is acting as a good support for the stock. And if there is any good buying happening and the stock comes again back to its ideal buy range, which is a blue highlighted area, then we might consider for addition. And if you are looking for fresh additions, you can keep this stock under your buy watch list as well. If you are still continuing to hold it, then you can keep a stop loss level around the low of these two candles. And if that low is breached, then you can consider exiting the stock. Ratings still remain intact. You can see EPS is at 92, very strong on the fundamental character. Return on equity is also very strong, 23%. Technical ratings have also stayed intact. You can see RS line, even though it came down a little bit, but still on absolute level, price strength is at 85, a strong constructive sign. ABD rating is also at A minus, again a positive sign. Number of funds invested in the company have also been very strong. So overall on ratings wise, O'Neill front, it is looking very good. So that is the reason we are still considering this stock for addition if it comes to ideal buy range. Thanks for joining today's pre-bill. Have a good trading session. Thank you, everyone.